Multifamily Mindset
podcast. Think bigger.
What's up, y'all? Tyler Deveraux here, and welcome back to the Multifamily Minute. This is your space for clarity, mindset, and real tools to help you grow your multifamily investing business, well, the right way. Okay, so let's get into this thing. The only way to win is to find the perfect market. That's absolutely not true at all. Here is the truth, though, that nobody talks about. The market doesn't matter as much as you might think. It's important, okay? But a good operator can make money in any decent market. But a bad operator, they can lose money in the best market in the country because they take their eye off the target. Don't get caught chasing hot cities that you see in the headlines. Instead, focus on the fundamentals. Job growth, population growth, landlord-friendly laws. Most importantly, sub-market intel, okay? Because here's what most beginners get wrong. They overfocus on where and ignore how. So you don't get the perfect market. You don't need the perfect market. You do need to deeply understand the market, though, I'll say that. That's where the edge is. See, sub-market beats market every time, meaning I've seen deals flop in Austin and thrive in Alabama. Why? Because the operator in Alabama knew their block. They knew their neighborhood. They had boots on the ground. They knew the tenant base. They understood the comps. Meanwhile, somebody in a hot city who didn't do their homework and got crushed because they didn't know their neighborhood, they just read a title and went full tilt in. So if you're just getting started, here's what I would tell you to do. Pick one market, study it, visit it, talk to brokers about it, build a team there, ask questions. Look at where the jobs are coming in, where the rent growth is happening, what class of tenants are moving in or moving out, and where are they moving to. And don't overlook the power of proximity. If you live near a decent market or have a strong connections in one, that's huge, dude. That's a huge advantage because real relationships give you real insight. So let's hit a few quick questions that I get all the time. Number one, what made you choose your first market? I chose it because I had a connection there. Somebody that I trusted with boots on the ground, and we knew that we could execute. That's why I went to Birmingham, Alabama. I promise you I didn't go to Birmingham, Alabama because it's some pre-emerging perfect market. I had a connection there that could help me source deals and could help me manage those deals, and I went full tilt in because guess what? They knew the neighborhoods, and I learned the neighborhoods and the areas from them, and then once again parlayed that into other markets. Now, another question, what's one less popular market where you've seen great deals? Look, man, I've seen strong deals in cities like Tulsa, Omaha, Birmingham, places most people ignore because they aren't sexy. But the numbers make sense and there's real growth. Think about this. Some of my best deals have come in areas like Hickory, Mooresville, Statesville, Lincolnton, Warner Robins, Forsyth, Georgia. These are places the most people in the country have no idea where those are even at. But I do, because I know not just the market, but I know the sub-market. Now, number two, what data should somebody actually look at when choosing a market? I mentioned this, but job growth, population trends, rent growth, vacancy rate, and is the area landlord-friendly or tenant-friendly? That's going to tell you almost everything that you need to know. So here's your key takeaways for today, okay? Pick a market, man, and then go deep into that market. The edge doesn't go to the one chasing the headlines. It goes to the one who knows their block. They know their neighborhood. All right, my friend, that is your Multifamily Minute. Once again, keep it simple, stay consistent, and I will see you at the peak. Peace.
Multifamily Mindset
Podcast.